Hello everyone and welcome to my morning report analysis videos on Thursday 1st of November with me, Richard Penn, market analyst at Hantec Markets. There is certainly an air of positivity through markets today. We've had some decent signs of a Brexit deal in the offing overnight. We had yesterday we had news from Dominic Raab, the UK's Brexit negotiator. He was suggesting that a deal could possibly be done by the 21st of November, and certainly it seems as though that the other news overnight, whereby the UK Times, the newspaper, reported that the suggestion of an agreement coming to the UK financial services industry, how they be aligned with the European financial services to allow continued access of the UK financial services into the European Union for that. So subsequently we've seen a lot of positivity. We've seen sterling bouncing quite strongly higher, 120, 130 pips up on the day. That was also helping to drag the euro higher. And just generally speaking, we've seen the dollar weaker across the board. You've also seen overnight positive, better than expected data from China, the China manufacturing PMI coming in at 50.1. That's above the 49.9, which would have been in contraction territory, but is also better than last month as well. So a slight bit of good news out of China, certainly helping the commodity currencies, the Aussie and the Kiwi, strongly higher today, and the dollar generally under pressure, which has dragged back the dollar index, which had broken out above 97 yesterday, but quite strongly back. But is this just a little bit of respite for those who are sort of shorting of the dollar? I think this is at the moment just a little bit of a counter trend move rather than a decisive trend changer. We've not really seen a great deal of move on Treasury yields today. The 10-year and the 2-year basically not going anywhere really. So I don't think a great deal of a trend changer going on through there. It's interesting that we continue to see the oil price falling back. Supply issues remain in terms of how Saudi Arabia are sort of trying to pick up the slack from Iran and other countries who are dropping off, but also there's demand issues, and also how the production in the States continues to climb. So that's why we're seeing the oil price continue to fall. What we have today is positivity through equity markets as well. We have that. And equity markets are strong. We had a bounce on Wall Street yesterday, continuing the rebound that we saw on Tuesday. We saw Wall Street higher yesterday, and the futures today are ticking higher as well. And that is again helping the European markets. FTSE 100 underperforming as sterling has outperformed. The negative correlation between the two continues to be a factor there. But generally speaking, we've seen equity markets strong on the more positive risk sentiment that we have in markets today. So data points today, we've had UK manufacturing PMI disappointing, actually really quite strongly disappointing on UK services manufacturing PMI, missing quite significantly there, 51.1, although it hasn't seemed to take anything out of sterling yet. Still, it's could sort of lead to the rallies just being paused a little bit. We've also got the Bank of England this morning. At lunchtime UK time, 12 o'clock, we've got the Bank of England, which is expected to hold rates unchanged unanimously, but also look out for Super Thursday, where we have the Bank of England quarterly inflation report and the minutes as well. Super Thursday is expected to update on growth and inflation, maybe a slight downward revision on growth and maybe even upward revision on inflation given the sterling weakness recently. So we could see some moves there. Into the afternoon also we've got the US ISM manufacturing, and that's expected to stay pretty strong at 59.0. Now, I mentioned it earlier, FTSE 100 is my chart of the day. FTSE 100 has had a significant rebound in the recent days, as sentiment has improved around equity markets generally. And there's a breakout, actually, a near-term breakout above resistance that was sort of 70.85 up towards 71.14. We sort of broke out up on a closing basis yesterday, and it's looking to use that breakout as a basis of support today. 70.85 is today's low before rebounding again back above 71.14. So it looks as though that the market is sort of trying to build a recovery. Look at those MACD lines crossing higher, the stochastics accelerating higher. Last time we had a MACD cross was back in September, and we saw that, if I get the crosshair, on the 19th, we saw a subsequent pretty strong rally in the wake of that. So we could easily see a rally back towards 72.20 as the first line of support, up towards 73 big figure as an old pivot as well, 73 big figure. So nice sort of recovery towards that could easily be seen, as the market has certainly seemed to have turned a corner with those momentum and breaking through resistance levels. So there's not a great deal of resistance until 72.20 now. Yesterday's high initial resistance 71.61. So how does the hourly chart look? Well, it's actually shows pretty decent improvement, actually, having broken out. As I said, you looking to use that as the basis of support now. Momentum indicators positively configured, or more positively configured than they've been for some while, certainly since the beginning of October, on that RSI, on the hourly, and also the MACD lines as well. So a little corrective move, maybe a chance to buy into support, certainly if that 70.85 support holds. So I wish you good luck in your trading today, and I will speak to you later.